Today, the Bureau of Labor Statistics released its non-farm employment report for January, and the news was good across the board. The passel of highly paid prognosticators were wide of the mark once again, as the consensus missed by at least 100,000 jobs. With the addition of 243,000 net new jobs, the unemployment rate moved down 2 ticks to 8.3%. Still high for the 12.8 million people who remain unemployed, but down from the 16 million unemployed at the peak of the Great Recession. Although these numbers are encouraging, especially for the re-election prospects of President Obama, structural concerns remain even if the employment numbers continue to improve. The unemployment rate for teens is nearly 25%. Long-term unemployed total 43% of all unemployed. We will know that we are making real economic progress once the 5.5 million long-term unemployed begin to find work. January's employment numbers point out the difficulty of predicting the future as far as economic statistics are concerned. As you may recall, last week Fed Chairman Ben Bernanke announced that the Fed was so concerned about slow economic growth and high unemployment that they pledged to keep interest rates low, abnormally low, for the next 3 years. Rising employment numbers will cast some doubt on the Fed's ability to maintain their pledge of low interest rates. If inflation begins to tick up, our bet is the Fed will begin to back off their pledge of extremely low rates. If interest rates begin to rise due to more economic activity, the presidential debate may shift away from a plan for economic growth to a plan to effectively deal with the debt. Stay tuned. There are more surprises to come. I'm Tony Ogorek.